Michael Landsberg is Chief Investment Officer at Landsberg, Bennett Private Wealth Management. Michael, welcome. So not that you're an economist per se, but you kind of have to have a view on this in order to figure out how to invest next year, right?
Absolutely. As a portfolio manager, I use inflation data. Really, is it growing or is it not growing, along with GDP, to kind of make some macro assumptions. And even though this data came out that looked good, if you kind of look under the hood, core PCE was up 11 basis points. It's at 2.8 year over year. That's the 8-month high from where we are. And core services ex housing is also at an 8-month high. So yeah, it's lower, but it's still at highs and it's accelerating the wrong way. Again, I'm not a big PCE fan user. We like headline CPE because it tracks better for us. But all this data shows me is inflation is accelerating.
So in the most meaningful way, obviously, is kind of how this all comes to bear on the markets. What are you doing with the portfolio for next year?
And part of that, Kelly, is you've got to look at some things that, again, when things were going to be transitory, we looked and said, okay, our models are showing inflation is going to accelerate. We want to have a portion of the portfolio in things that do well in an environment where inflation is accelerating. I don't think it's going to accelerate as much as it did in 21 and 22. But the idea is having some things in there that do well in that environment. Tech would be one, industrials, some businesses that have pricing power, because we think that's going to be an environment where you want to have a portion of your portfolio geared to the fact that, are they going to be underestimating inflation? Their track record is they underestimated it the last time. We're going to have a little bit of our allocation towards, hey, it'll start to get a little hotter than people expect.
You know, I appreciate the viewer who pointed this out yesterday, but it does seem significant to me that we don't have the same kind of commodity rally that we did at the highs of inflation a couple of years ago. And I remember when Jeff Curry of Goldman Sachs would come on and tell us, look, there's literally too much stuff and too much money in the hands of too many people chasing too many things. And that was a global phenomenon back then. Now we have oil prices, going nowhere. I was checking on copper prices. It's not even one of the top searches on our website anymore. Natural gas is kind of an idiosyncratic story. It's still low. So from that sense, it doesn't feel like the market is acting like broad-based inflation is actually going to be the story for 2025.
Well, I don't disagree. Oil, I think the fact that we're going to have an administration that's going to be more interested in expanding oil, it's probably going to keep oil prices lower. But the CRB index hit recent highs for the year not too long ago, and food prices are continuing higher. But yeah, oil drives a lot of that. I'm not expecting a 9% CPI type number that we had in 2021, but I think it's going to go higher. I really look at the direction, and the direction is higher, and I want to make investment assumptions based on that. I don't really focus on the absolutes. Is it 2.9? Is it 2.95? It's gone from 244 to 26 to 275. We think it goes higher. We're going to make our investment assumptions based on that. I don't predict it's going to go to 8 or 9%, but higher is not going to 2%.
Yeah. So give me some more granularity. I mean, what do you do with big tech? Do you like small caps, or do you think those are actually hurt by inflation?
I think small caps are. I think rates are going to stay higher for longer. We haven't liked small caps really in the last 3 years, and they're basically about where they were 3 years ago. A lot of good things have happened in the market. The Russell 2000s made no money in 3 years. So I look at that and think I still want to stay away. That earnings growth is negative. But obviously, NASDAQ earnings year over year up 20%. That's attractive. I still think there's some froth there, but there are some values when you look at what's out there in tech land. There is some things that have been beaten up a bit. I think if you're going to pay for AI, you're going to want to get the growth in the stories. I think that's good. I think industrials are solid as well. So we do think there's opportunities here because earnings growth is there. I'd stay away from small caps, given the fact they are cheap, but they're cheap for a reason.